Hello and welcome to GoodGood Investing. My name is Rachel Grunn.
And I'm Andrea Cwik.
And at GoodGood Investing, we prioritize education and also providing investment opportunities to busy professionals and successful entrepreneurs that would like to diversify their investment portfolios into real estate passively. Right?
Exactly. Yes.
But there are multiple ways to passively invest in real estate. And we're going to be we've talked a lot about syndication, but there actually is another way which isn't super popular. It's rare, but there are some benefits to it. It's called a fund, a real estate fund, right?
Yeah. Yeah, exactly.
And we're going to talk about why someone would want to invest in a fund and what the differences are. Not necessarily whether one is better than the other. I think that's your decision to make, but
Yeah.
there's a lot of differences between a fund and a syndication.
Yeah. So a syndication typically is per asset, where we look at, are we buying an apartment building? We're going to open up a business, an LLC, for acquiring that apartment building. Or we're going to buy a triple N, which we are doing right now, and we are buying the land plus the new build structure. And so we're opening up an LLC for that. And so it's very specific to what asset we're purchasing. And then a fund is where it's kind of all combined, where it's an open concept where there's money that is crowdsourced still, and people put money into a bucket, right? And then the drops that go into the bucket are all different types of real estate. So it could be all multifamily, or it could be a combination of multifamily and triple N. It could be Airbnbs, triple N, multifamily. And the people that decide what goes into that bucket are the managers, but the passive investors don't necessarily dictate where their money is going. It's
Yeah.
pretty much diversified within that fund. On the syndication side, the passive investor, although passive, still gets to dictate where their money is going, because they're the ones that are electing where they're putting their investment.
Yeah, exactly. And it's also important to note that in a fund, you're not investing in real estate, you're investing in a company, but that's backed by real estate.
Yes.
Yeah. So you don't get the tax benefits that you would get from a syndication investment. You can't claim depreciation because it's a fund, and you're not a co-owner in these buildings, right? You are funding this company's venture to purchase these buildings. I mean, the risk is still mitigated because it's real estate. It's better than just investing in the stock market, in my opinion.
Yeah.
But it's not like directly investing in real estate. So what's the difference between a fund and a REIT? Because we've talked about REITs before, which are real estate investment trusts, also kind of a fund. The difference is one is private, one is public.
Yeah.
That's it.
Yeah.
So funds are privately held. You still have to know the syndicator. You still have to be invited to participate, right? Whether it's through an email, a phone call, a referral. Whereas a REIT is publicly traded on the stock exchange. So anyone can invest, but it also subjects it to market volatility, because that's the thing. That's with IPOs, it can be a lot more risky. But yeah, that's, I feel like, the biggest difference. So I mean, what are your thoughts? What is your thoughts, funds versus syndication?
Yeah, I mean, I personally do like the idea of dictating where my money is going to go. And I like being in control of choosing. So we put, quite a bit of investing dollars towards multifamily. And I've been able to select, okay, I want some of that to go in Arizona, some of it to go into Florida, some of it to go into Georgia. So I've been the one that looks at each deal, looks at what the depreciation is, the tax benefits, that looks at what the cash flow is, the returns, the location. Do I like the way the asset looks? Do I agree with, the kind of tenants that are going to be there, crime? I get to do all of that and be in the driver's seat when I go and invest in syndications. But if I would have done a fund, which is also, good for some people. They're completely letting a business manage the portfolio for them. I particularly want to be more hands-on in my decision making.
Yeah, I would agree with you. I would definitely want to be more hands-on in my decision making. So why would anyone want to invest in a fund? I think it's mitigation of risk because
Easier.
easier. You don't have to do as much due diligence on the
Yeah.
location or the property. And then you do get the diversification from investing in a bunch of different assets, but typically it is a lower return, and then you don't get the tax benefits. So it's just to each their own, right?
Yeah.
It's like that might be the perfect investment for someone is in a fund, and they hate the syndication model, or vice versa. But we just wanted you guys to know that it's out there. It exists. Funds, REITs, syndication, they're all real estate backed. Some are just more directly owned than others.
Yeah, no, and I think for some people that are investing in stock, or that's kind of like the background of investing that they're very comfortable with, they might even think that they are investing in real estate by investing in a fund or a REIT. But like you said, the reality is that you're investing in a business that's managing it, or you're investing in public, like a public company that is managing those assets. It does not mean that you're a co-owner.
Exactly. So, really important distinction. Stay safe out there, folks. If you aren't sure which is the best investment for you, we're happy to brainstorm with you. We can't advise you what to do, but we can certainly share our own experience like we do on this podcast. And of course, provide you opportunities to invest. So get in touch with us if you're interested, goodgoodinvesting@gmail.com, or head to our website, goodgoodinvesting.com, where you can schedule a call with us so you can hop in on that deal flow and start investing for your future. Boom.
I honestly think about like all of our listeners have such a great opportunity to partner with us on deals. And I often think I wish I would have known about good investing years ago.
know.
Because I knew nothing. And now I know so much.
I know.
It's amazing. So anyways, if you're a listener or you're just tuning in, just book a call with us, and knowledge is power. So like the more you know, the better. What is the saying? The more you know.
I could make one up right now.
Wait, that's from a show, isn't it? The more you know. Reading Rainbow?
Yeah, I know. Reading Rainbow. Yeah, with the star shooting across. The more you know. But I don't know what the second part of that slogan is. We're just gonna say, the more you know, the more empowered you are.
Yes.
The better decisions you can make for yourself. Knowledge is power, and education is currency. I really believe that. So, act on it. Now that you know, act. Get in touch with us. We'd love to hear from you. Execution. And stay tuned. We have some exciting episodes coming up. We're going to be digging more into our triple net offering and talking about exciting things happening there. So stay tuned. Until next week, don't invest good.
Invest twice as good.
Bye.
Bye.